Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone. We're about to take a deep dive into a stack of recent financial news and analyses, pulling insights from some key outlets like Reuters, CNBC, and Bloomberg, all published on or around Monday, August 4th, 2025. Our mission today is, well, to cut through the noise a bit, unpack the biggest headlines hitting global markets, trade, tech. Look for those underlying stories, the connections that matter. The goal is really to get you quickly, but also thoroughly up to speed on some pretty complex and fast-moving stuff.
Yeah, absolutely. And it's definitely a packed agenda we're looking at. We'll kick off with the latest market moves and the ripples from some pretty significant political and economic decisions happening right here in the U.S.
Okay.
Then we'll pivot a bit, look at the major developments in international trade, tariffs, see how those geopolitical tensions are playing out economically.
Right.
And finally, we'll dive into crypto and blockchain, their evolving role in finance. Some are calling it a quiet revolution, but it seems to be picking up speed.
Okay, let's unpack this. So, starting with that global market snapshot from Monday, August 4th.
Yeah.
The picture across Asia-Pacific was, well, a little mixed, but mostly leaning positive. Our sources, Reuters, for example, noted Hong Kong's Hang Seng Index finished the day up. Pretty solid, actually, 0.92%.
Yeah, it's decent.
South Korea's Kospi also advanced, 0.91%, and India's Nifty 50 was up about 0.5% by the afternoon.
Okay, so mostly green then.
Mostly, yeah. But you know how markets are? There were some notable exceptions grabbing headlines. Japan's Nikkei 225 benchmark, it ended 1.25% lower.
Oh, okay.
And the broader Topix index fell about 1.0%. Actually, Japanese stocks, they initially dropped over 2% in early trading. So a pretty different feel there compared to the rest of the region.
Right. And the insight there, as CNBC reported it, really highlights how interconnected everything is. Japan's market slumped like that almost directly because of that weaker than expected U.S. jobs data from last Friday.
Okay. The jobs report effect.
Exactly. It immediately fueled concerns, among investors about a slowing U.S. economy. Maybe even some analysts were saying maybe even a recession footing.
Wow.
And that hits currencies, right? So the yen weakened against the dollar because people started speculating about a Fed rate cut. And you saw financials, export companies like big automakers leading declines in Japan.
Makes sense.
While interestingly, domestic demand stocks, small caps, were maybe seen as potential beneficiaries. It just shows, no market is really an island anymore.
Yeah, definitely not. And that U.S. jobs data, it wasn't just a number. It really kicked off some drama. But just thinking about it, was there any sort of counter-narrative, any different take on that data our sources mentioned?
Well, the report itself, and Bloomberg detailed this, it was pretty stark. I mean, only 73,000 non-farm jobs added in July. That was way below what people expected.
Okay.
But maybe the bigger deal was the revisions. May and June figures got these steep downward revisions, cutting combined 258,000 jobs.
Whoa, 258,000.
Yeah. And to put that in perspective, that's the biggest 2-month downward revision since, April 2020, right at the start of the pandemic shock.
Right.
So the immediate market reaction, it definitely reflected that shock. It suggests the consensus was pretty overwhelmingly negative. Not much room for a positive spin given those numbers.
And then President Trump's reaction, that was immediate and pretty unprecedented, wasn't it? Firing the Bureau of Labor Statistics Commissioner Erica McIntyre.
Yeah, publicly accusing her of manipulating data.
He posted on Truth Social something like, "We need accurate jobs numbers." And I've directed my team to fire this Biden political appointee immediately.
Exactly. And that firing, as you said, drew really sharp criticism, even from folks like William Beach, who was McIntyre's predecessor, appointed by Trump back in 2017.
Oh, we're interested.
Yeah, he called it totally groundless, damaging to the whole statistical system's integrity. He really emphasized, that the BLS data is compiled rigorously, the people there are professionals, and the markets reacted to that news too. Right away on Friday, S&P slipped 1.6%. The Dow dropped over 500 points just on that news.
So this week's jobs report, it obviously puts pressure on the Fed, but with President Trump already criticizing Chairman Powell for not lowering rates, how does this political intervention kind of complicate things for the Fed? What are the different views on their next move?
That's the central tension, isn't it? Despite the president's pressure, the weak jobs data itself actually pushed futures markets to price in a pretty strong chance of a rate cut in September.
Okay, so the market sees the data and expects a cut.
Right. The sort of standard economist view is the Fed follows the data. Weak jobs usually means easier policy. But the political pressure, especially with Trump saying he'll name a new Fed governor and a new jobs data head soon.
Right, you mentioned that.
That definitely adds complexity. I mean, those appointments could shape his agenda, maybe create a different dynamic inside the Fed, even while the market seems to see a clear path to lower rates based on the data itself.
So a lot of uncertainty swirling around the U.S. economy then, and it feels like similar pressures, similar changes are happening globally when we look at international trade.
Absolutely. And one of the big ones right now involves Switzerland. Reuters reported on this. The U.S. just slapped this punitive 39% export tariff on Swiss imports, effective August 7th.
39%.
Yeah. And it immediately hit Swiss stocks. The main index fell. You know, big drug makers like Novartis and Roche, they're almost a third of that index they saw declines. And the luxury watchmakers, too, Richemont Swatch.
I saw that Swatch CEO Nick Hayek had a strong reaction.
He did. He publicly called on the Swiss president to basically fly to D.C. and negotiate directly with Trump.
Really?
Yeah, warning that a 39% tariff could be, quote, devastating, especially for those entry to mid-price watch brands. And remember, the U.S. is Switzerland's #1 foreign market for watches. We're talking, what, $5.45 billion in exports?
That's huge. So it's not just watches, though.
Well, drugs are exempt for now, but Swiss officials are clearly worried they could face separate levies down the road.
Okay.
So you see drug makers like Roche and Novartis already trying to get ahead of it, pledging huge investments in the U.S., over $70 billion, they're saying, in R&D, manufacturing, distribution.
Trying to make themselves indispensable, basically.
Exactly. Strategic navigation of political pressure. Trying to avoid future tariffs by embedding themselves deeper in the U.S. economy.
Okay, so from Swiss trade complexities, let's shift east a bit. You mentioned unresolved U.S.-Korea summit details from last week.
Yeah, what's really striking there, and Reuters highlighted this too, is just the lingering ambiguity. Experts, former negotiators, they point to several issues still kind of up in the air from that recent trade deal.
Like what?
Things like defense costs, corporate investments, non-tariff barriers, even currency issues. And a key problem seems to be the lack of a solid written agreement from last week's talks.
So it was mostly verbal.
Apparently, which led to conflicting stories almost immediately. Like, the U.S. side claimed they'd get 90% of the profit from this big $350 billion South Korean investment fund in the U.S.
90%.
Yeah. But South Korea denies they even discussed profit distribution, saying they expect profits to just be reinvested. South Korea's finance minister, Koo Yoon-kil, he summed it up nicely. People say the devil is in the details.
Definitely sounds like it. Verbal agreements without written terms.
Mm-hmm.
Yeah, that seems like a recipe for future problems.
Precisely.
And it sounds like India is also walking a bit of a tightrope, particularly over Russian oil.
They really are. President Trump has threatened India with a 25% tariff, plus some unspecified penalty for buying Russian oil and also military gear.
Okay. What's the context there? How much Russian oil are they buying?
A lot, actually. India is the world's third biggest energy consumer. And since the Ukraine war, Russia has become its #1 oil supplier. Russian oil jumped from like 2.5% of India's imports before the invasion to 39% now.
Wow, that's a massive shift.
It is. And this penalty Trump mentioned, it could be anything. Sanctions on Indian companies, restrictions on U.S.-India trade. It's a significant economic risk for Delhi.
So how is India responding?
They're staying pretty non-committal. Their foreign ministry just said, decisions on energy imports are based on market prices and the global situation.
Right.
And it's interesting, the previous U.S. administration was kind of more tolerant of India buying Russian oil. And India's energy minister has argued that buying that oil actually helps stabilize global prices by adding supply.
A complex argument.
Very. Analysts are calling it a clear and present danger for India, a tough choice. They might try to use the Russia option as a bargaining chip, but they're probably also looking hard at alternatives if the U.S. pressure really ramps up. It's a delicate balancing act, for sure.
Okay, let's pivot now to tech. NVIDIA in China, another place where trade and geopolitics seem to be colliding.
Yeah, definitely. So even though the Trump administration recently gave assurances that NVIDIA can resume selling its H20 chips to China, remember they were effectively banned back in April.
Right.
Despite that, Bernstein, cited by Bloomberg, predicts NVIDIA's AI chip market share in China is going to fall pretty significantly, down to maybe 54% next year from 66% this year.
Why the drop if they can sell again?
Competition. Plain and simple. Chinese rivals, especially Huawei, are grabbing market share fast. And Beijing is actively pushing companies towards homegrown AI infrastructure.
The localization push.
Exactly. They're projecting China's AI chip localization ratio to jump from like 17% in 2023 to 55% by 2027. That points to a really big long-term shift in who dominates the global chip market.
And Beijing itself is applying pressure too.
Yeah, new scrutiny. The Cyberspace Administration of China apparently summoned NVIDIA recently. Concerns about national security, potential backdoors in those H20 chips. NVIDIA denies it, of course.
It's just fascinating how these trade disputes weave together,
Mhm.
from the price of your watch to national security chips. What's the most surprising connection you've seen in these sources? The one that really hits home how global this all is.
I think maybe linking back to that NVIDIA story, it's the sheer speed and determination we're seeing from countries trying to achieve tech self-sufficiency, especially in critical areas like AI chips.
Right.
It's gone beyond just trade balances now. It feels like it's fundamentally about national security sovereignty. Technology itself is becoming the new key battleground for global power, and that shift is hitting everything from company profits to international alliances.
Okay, moving to our final segment then. Let's explore this digital frontier. Crypto's growing influence, starting with stablecoins seeing a surprising surge.
A really dramatic surge, actually, especially in Asia, for cross-border payments, business to business, B2B mostly,
What a jump.
speed and cost mainly. According to Artemis, a blockchain analytics firm we looked at, it's just faster and cheaper than traditional bank transfers for many businesses. We're talking monthly B2B stablecoin volumes hitting over $3 billion by early this year.
$3 billion a month. Wow, from what?
From under $100 million back in early 2023, so a huge leap.
And where's this happening most?
Well, Singapore and Hong Kong are apparently in the top 3 markets globally for these flows, right after the US. And the Singapore-China route seems to be the busiest one.
Interesting. Are we seeing actual businesses using this,
Yeah.
not just speculation?
Yeah, that's the key. We're seeing examples like online travel agencies, WeTrip was mentioned, luxury goods resellers like Ginza Xiaoma, even high-end hotels like Capella Hotel.
Okay.
And there's regulatory momentum, too. Hong Kong legalized digital tokens. The U.S. passed that Genius Act, which President Trump signed, aimed at providing some clarity for digital assets.
Right.
And even in China, Shanghai is exploring blockchain for cross-border trade. Big companies like JD.com and Ant Financial are planning to issue Hong Kong dollar stablecoins. It suggests these networks could genuinely start replacing things like SWIFT for some transactions.
That digital shift leads us nicely to Ethereum.
Oh.
Quite a milestone for them recently.
Yeah, Ethereum just hit its 10th anniversary. And its evolution has been pretty profound, hasn't it? From what co-founder Vitalik Buterin called a scrappy experiment to, well, some are now calling it Wall Street's invisible backbone.
Invisible backbone.
Yeah, I mean, it's not just its growth, it's how quietly, almost without people noticing, this decentralized tech is getting integrated into core financial infrastructure.
Powering things like
Stable coins, tokenized stocks, instant global payments. It signals a pretty fundamental shift, suggesting crypto isn't just some niche asset anymore. It's becoming part of the essential plumbing.
and it's big institutions getting involved now too, right?
Absolutely. BlackRock, Robinhood, Deutsche Bank, they're all actively building on Ethereum rails. And Circle's USDC stablecoin, the second biggest one, still settles about 65% of its volume on Ethereum. That shows how foundational it is.
Does Buterin himself see any risks with this mainstream adoption?
He does. He's voiced concerns, particularly about centralization risk if, too few big players end up dominating the ecosystem.
Okay.
But despite that, for institutions, Ethereum's value seems to be its stability, dependability, global reach, the huge capital flows, and that it's programmable. Maybe more than just raw speed. Plus, that shift to proof of stake cut its energy use by over 99%. That addressed a huge environmental criticism leveled against crypto for years.
Okay, finally, let's touch on Coinbase. They had a pretty controversial ad in the UK recently.
Oh, yeah. They dropped this musical ad called Everything is Fine, and it just openly satirized the UK's economic woes, strikes, job losses, prices going crazy. There was even a scene with fish fingers priced at £100.
£100 for fish fingers, that's bold.
Bold is one word for it. You can imagine the debates about whether that would land well or just bomb.
And how did it land? Bloomberg reported pretty divided opinions, right?
Completely divided. Lots
Yeah.
of VCs, fintech folks, they praised it, saw it as a critique of, overbearing bureaucracy and stifling policies in the UK.
But others.
Others called it tone-deaf, self-promotional, even arrogant. Coinbase's CEO Brian Armstrong, he denied it was a direct hit on the Labor government, said it was more a general critique of traditional finance, positioning crypto as the alternative.
Interesting defense.
But it definitely highlighted this underlying tension, right? Crypto firms like Coinbase arguing UK regulators are too strict, that the country's losing its edge as a fintech hub to the US and Asia.
That classic regulation versus innovation debate.
Exactly. And meanwhile, Coinbase isn't waiting around. They're planning to launch tokenized stocks, prediction markets for US users soon. Still pushing forward.
So connecting all this back, it really makes you wonder, doesn't it? How quickly will these digital financial systems reshape your everyday transactions? Beyond the headlines, what's the impact on how you pay, save, invest? Maybe sooner than we think. Feels like just the beginning of a big shift.
Well, we've certainly covered a lot of ground today, from those immediate market shifts and the ripples from U.S. economic data, right through the complex dance of global trade disputes and into that quieter but accelerating digital finance revolution. It's just so clear how interconnected it all is. A decision here, a development there, and the consequences echo across the globe almost instantly. Absolutely. And maybe a final thought for you listening. Consider how these pressure points and these innovations we talked about, whether it's the future of a trade deal affecting maybe the price of something you buy, or the deep plumbing of Wall Street shifting towards crypto rails, how they're actively shaping not just the big economies, but the future landscape of money itself. The disruption isn't always loud, but it's definitely happening, potentially changing how you interact with finance in ways you might not even expect yet.
That's it for this deep dive. We'll see you all tomorrow morning with new headlines from major financial magazines.